Okay, we're going to go ahead and get started. Thank you so much for joining us today. My name is Jennifer Young and I'm with University Credit Union. And joining me today is Don Taylor from our mortgage department.
Good afternoon and welcome.
And we're going to be presenting information today covering construction loans and lot loans. And so hopefully you found yourself in the right place. If not, stay with us and we'll cover some fun information. Just a few housekeeping items. If you have questions throughout the presentation, please type those in. You can see on your screen the question bar. Please type those in, and periodically through the presentation, we'll stop and answer those questions and address some of those questions that are presented. Again, we're presenting information today covering the different construction loan programs and lot loan programs that we have here at the University Credit Union. And we're going to dive right in and get started. So the construction loans, I'm going to have you go to the next. There you go. Oh, that's right. I totally see. It's a good thing we're live. You get the imperfections. So by attending today, you qualify to be put into a drawing for a couple of tickets. And I'm going to have James from our marketing department that's joining us today cover what those tickets are and what you can win.
Yeah, just real quick before we get started. So we have 2 tickets to go see the Utah Utes play USC in basketball. But on top of that, you get to do the shoot for loot, it's called, where during the game you actually get called onto the court. You get a chance to win up to $600 if you make a layup, free throw, 3-pointer, and half-court shot in a time frame. So everyone who attends the webinar is entered to win that, and we'll give you an email after the fact with both a copy of the recording, and we'll also announce the winner.
Okay, thank you. Now we're going to go ahead and get started. So, construction loans. Don, I'm going to have you cover this.
So just a brief review of what our construction loans do. If you want to build your home after you've been looking for a while, just what it's not. A construction loan is not if you're dealing with a builder like Edge Homes or Ivory Homes, because they'll build it for you, and then all you need to worry about is your takeout loan, your financing when they're complete. What our construction loans do is if you have a lot or have a specific place that you want to build, if you have your own plans you want to build, something like that, you want to build a custom home, that's what these construction loans do. Because they're individual, they're not tract homes, they're specifically tied to your needs, your plans, your specs, your cost breakdown. That's what our construction loans are here for. And we have different types of construction loans that Jennifer will talk about.
And we're going to go into the details on that. So, Don, on the construction loans, is this the right kind of loan if I wanted to do a renovation? Would this work for that kind of
a remodel, a renovation, a fixer-upper, a new build? Yes, all those above works within our construction loans. We will do a remodel or a rebuild on an existing place if you want to expand your current home.
Okay, great. And we'll get into some of those questions a little bit later as well. So, first type of loan we're going to talk about is the one-time close construction loan. You're going to hear us refer to one-time and two-time close. And essentially what the one-time close means is that you're closing one time. The first part of the loan will be for the course of construction. You'll do a slight modification, so you'll just sign a few modification documents, and then the long-term loan will take over from there. The term of construction, while you're in the construction phase, you'll pay interest only on the funds as they're drawn. So at the first part of the construction loan, there may be the final payoff on the land, there may be some initial deposits that are required for subcontractors, deposits for ordering products and stuff for the home. Those will be paid at the first, and not the whole loan will be drawn, just that portion. And interest is accrued on that. You'll receive a bill monthly, and you'll pay that interest monthly as the funds are drawn. The long-term loan, once the home is 100% built, we'll do a slight modification and go on to the long-term, and that's when you start your long-term payments, so on a 30-year or a 15-year, whatever term you choose. The benefit of that, you have the long-term rate locked up front, so when you close, it actually locks in that long-term interest rate. And your closing costs are paid one time. You pay one set of fees. So not two sets, two title fees, two appraisals, it's just one set of closing costs, which that seems to be the biggest benefit of a one-time close. Now, on a two-time close, the next option is exactly different. Well, exactly the opposite. So you close on the construction loan. At the beginning, you go through the construction phase, interest only on the construction loan. Once the home is 100% complete, you'll sign a new set of documents and close again at the title company on the long-term loan. The difference between these two is your long-term rate is subject to current rates when the home is complete, so you're subject to market conditions. You also have two sets of fees. You have the set of fees on the construction loan and you have the set of fee on the long-term loan. And the credit union recognized that, and so what we've tried to do is come up with a solution to help towards that. And so we actually credit 0.5% of your loan amount towards your long-term closing costs. It offsets most all of them. The thing that it doesn't offset is it doesn't offset your taxes and insurance reserves, but it does give you a big portion of the other ones that are covered. And so it really does help out. Where you're going to find the difference on these, the one-time close allows you to do anything up to conforming rates. And when I refer to that, it's your county rates. So conforming is anything in Salt Lake County under $600,300. Anytime you go over that $600,300, you're going to fall into a category of a jumbo loan, and that means you're going to be tied to this two-time close. So it really comes down to the loan amount, which one is going to be most beneficial for you. And we'll look at those different options for you and give you the comparison of the two, and then you'll help decide what's best for you. Anything you want to add to that?
Yeah, mainly the one-time close is the most popular. It's the least expensive. With a one-time close loan, you're really tied to time frame and cost, because once you close, that's the loan you get. That's the loan amount you get, and that's the interest rates you get at that point too.
That's a really good point, and thank you for bringing that up. One of the things that we run into from time to time is if you do construction loan, if you do the one-time close construction loan, and your long-term loan is locked in, and you say that you're going to have the home done in 9 months, and for some reason there are some unforeseen delays. If it goes past that 9 months, we cannot hold that long-term rate. Then you're subject to market conditions. And you will be required to pay an extension fee to extend for any additional time beyond that 9 months. And so we really counsel closely with you to identify which term is going to be the best for you. So just a quick comparison. Oh, whoops, I lied. We're not going to do the side-by-side comparison because it's up next after this. But we want to cover lot loans. So Don, I'm going to have you cover lot loans.
So we do have a lot loan product. You can kind of see on the screen that these are improved lot loans. They need to, they're intended, our lot loans are intended to turn quickly into a construction loan where you can build. You can see we amortize those over a 15-year period, but there's a 2-year call. And what that 2-year call hopefully does for you is gives you time to get your plans ready, get your home ready to start to build, get your construction loan in place during that period. This is not something that it terms out over a 15 or 30-year loan. These are shorter term loans in preparation for a construction loan. We'll end up to 70% of the purchase price of your lot. Sometimes when you buy a lot, most sellers don't want to wait 6 weeks to 8 weeks to do a construction loan, or however long that's going to take. So we do have this lot loan that we can get the lot in your name in place, and then the construction loan will come in after the fact and pay that lot loan off for the construction loan. But we do have lot loans for those needing this product.
We do a lot of lot loans also for people that are looking at tying up the land and then maybe 6 months to a year finishing up their plans or working to try and find builders. So we really do offer quite a few lot loans. We do close quite a few lot loans for that purpose, where people are still trying to decide on exactly how they want their home to be and either working to find a builder or working with the builder to try and finalize those plans. So it's a good way to tie that land and not lose out on that land. So just a side, I keep saying that. I'm so sorry. See, it's live and you get mess ups like this. So just some overview on construction loan specs. So for the construction loan, the interest rates are low. in comparison. Construction loan rates are somewhere in that 4.5% to 5% range. It's not a variable rate above prime. It's actually a set rate. There are interest-only payments through the course of construction. So whatever is drawn the first month, you'll get charged interest on that, and so forth throughout the process of the construction. We'll do up to 95% of the value or cost, whichever is limiting the most. Loan amounts, we can go up to $2.5 million. We really can go a little bit higher than that, but if it goes much over $2.5 million, we're going to get our commercial department involved and help us go ahead and go up to that. We have done higher loan amounts than that, but we really like to kind of stay within that range. And we do reserve the right on these construction loans to do it for your primary residence and your secondary homes. If you're looking to do a construction on an investment property, we would love an opportunity to talk to you. That would be handled in our commercial department. But for this purpose, these loans, these are reserved for primary and secondary homes. So now the side-by-side comparison.
Again, the one-time close and the two-time close. The big determining factor for this is loan size. Again, a jumbo loan would have to go to a two-time close. It does not fit into a one-time close because of the size of the loan. But again, one-time close, you close once. You don't have to reapprove once the homes, or get requalified once the home's done. Loan amounts are restricted to your county limits for the one-time close, and your upfront long-term rate is capped or guaranteed at that point when you close the one-time close construction. Again, both of these are for primary residents as well as secondary residences. Loan caps with certain provisos to go a little bit higher is $2.5 million. If you can do that, come to me. I'd love to give you this loan for $2.5 million.
I know, we would love to write a new loan for $2.5 million. Because we want you to know what you can expect through the process, we're going to go through kind of a step-by-step and show you what you can anticipate expecting going through the process. So the first thing that you need to know is we really require a general contractor to be involved throughout the process. We are not interested in doing owner builders, and the reason behind that is the security for you as our members. We have found that it is most beneficial to have a general contractor involved, to have those processes in place where there is insurance in place and there is licensed contractors being utilized, that you have liability insurance and the workman's comp in place. Those just have turned out to be very beneficial for our members, and so we require that a general contractor is involved. If you have a scenario that you have us to consider outside those guidelines, give us a call and talk to us about it. We will talk to you, but just know we really want to see a general contractor involved. The income the documentation that we gather not only from you, but we also require that our builders go through the same screening that you go through as far as qualifying. We gather information from the builder that include their financial documents. We look at their credit. We look at their relationship with their subcontractors and their suppliers. We get references and check to make sure we underwrite them almost as thorough as we do you as the member, just simply because we want to make sure that we're ensuring this good, successful event for you. And we want to make sure that it's a good experience and not a negative. And so by underwriting the builder the same as you, we're able to help ensure that.
The preliminary loan approval, that's when you sit down with a mortgage loan consultant and we go through, we pull your credit, we review your income, we get you pre-qualified for technically the long-term loan, just to make sure that once the construction is done, that it will easily roll over into the long-term takeout loan and you can start making your payments and just enjoy your new home. But we go through all that, we pre-qualify you to make sure that everything's going to work up front. We look at your income again, we pull your credit just to make sure that it's going to work. Help you understand, how long it's going to take you to build this home, and in working with your builder. We're going to review the documentation from the builder as well. So that's when we start gathering this information and make sure that you qualify for this loan.
So appraisal and title are a little bit different for a construction loan. An appraisal is performed and completed subject to completion. So it's really important when you get with your builder that you put together a comprehensive cost breakdown and set of plans, that you address finishes and completion the way that it's going to be completed. It's really important that whatever you give to the appraiser, whatever you give to us and is forwarded to the appraiser, is actually followed through. So we run in from time to time that people say we're not going to finish the basement, and they finish the appraisal, and then somewhere along the line they decide that they want to finish the basement and it changes the value. That's great. We love hearing that. The reverse is also the case. Sometimes people say we're going to finish the basement, and then they don't want to because it's expensive and they run into problems financially. And so we want to make sure that you're being open with us and communicating so that the appraisal is completed correctly, and that we're giving you the benefit for the finishes and those things that you're choosing. Likewise on title, title's a little bit different as well. Title actually searches a little bit more in depth than they normally would on just a regular purchase. They reach out to the State Construction Registry. You'll hear us talk about the SCR, the State Construction Registry, often. It's unique to Utah. Utah is the only state in the nation that has the State Construction Registry, and they help monitor and make sure that those that are involved in this construction project are taken care of. So not only workers, but suppliers that supply products, and as well as the general contractor, all have a right to payment for services or work done. And the SCR monitors that, and we work very closely. Title works very closely with the SCR to ensure that at the end, when everything is all said and done, that you have a first place position and that we can close on the long term. So there's a few more things involved with the appraisal and title than on just a normal purchase, and we just want you to be prepared for that.
So once we have the appraisal, we have the title work, we have the State Construction Registry, we have your income, we have the information from the builder. The underwriter looks at it and gives their final stamp of approval that we're going to go ahead and close this loan. And just notice that, you know, on every construction loan that I've done anyway, it just takes longer than a normal loan because we're waiting sometimes for you and the contractor to come up with a contract, to this cost breakdown or this budget that it's going to take you to build this home. We're also sometimes waiting for engineering on plans and specs. So the more work you put into this, the more prepared you are, the faster this process goes. But say you're going to, you know, want to start construction in, you know, April or May when the weather breaks and you can start digging on that. You need to start now for these things because you're going to find out what you need, and you're going to start picking your contractor. We're going to make sure that this goes smoothly for you, but the more prepared you are going into this, the quicker this can go. But it does take longer than a normal loan process.
Okay, once everything is all finished up and we have the clear to go, you'll go to the title company and you'll sign enclosure with the title company. And at this point, this is where everything is settled. This is where you'll need to bring the funds in for the difference between whatever the cost is and your loan amount is, as well as the closing costs. All of this is settled at this point. Once the title company settles this, they actually take about 2 days to record your deed of trust. And the reason for that is once you sign all of your documents, they send a representative out to the property to make sure that everything is still, nothing has started, no construction has started, nothing has, they call it a broken lien. There's no broken lien. There's no liens with the SCR. They check with the State Construction Registry to see that everything is clear. Once they've insured all of that, then they record the deed of trust and insure a first place position. And that's when construction can start. Now, we haven't really said anything before this, but it's really important to point out, you don't start construction. You don't move dirt. You don't get out and start digging on the property or have people delivering things on the property, or some people need dirt added to their land. Some people need dirt removed from their land. Some people have big boulders in the way. None of that can start before you close and record the deed of trust. If you do, what happens is it's a broken priority, and the title company will have a difficult time recording us in a first place position. So we have to be really careful about that. And you'll hear when you talk to a mortgage consultant, you'll hear that a lot. Don't start construction. That's probably our number one thing that we'll say over and over. Don't start, don't start, don't start, because if you do, it can affect our ability to do this.
And another thing too is we've had some people come in and say, hey, I'm halfway done with the construction on my home. I've financed this up to this point, but I need, another $100,000 to finish. Those are just extremely hard to do. So just make sure that, you get in place the construction loan first before you start. And using your own funds is great and it's cheap, but if you run out of money, it's almost, I'm not going to say impossible, but it's very, very difficult to proceed and get a loan over the place where you've already started construction on a home and you're halfway done with that home. So plan this out well before you start.
Okay, before we go forward, we have a couple of questions. So welcome, Shane. Good to see you here with us. On a remodel or addition to your current home, using a one-time close, what is the average time frame you have to complete the project? 6 months, 9 months, or 1 year? It's a good question. Thank you for asking. We actually provide construction loans up to a year. You really need to kind of gauge and choose what works best for you. We really try and encourage you to gauge that well and guess well. I know it is a guessing game. If you talk to the builder, or if you talk to whoever's going to be helping you through, if you sit down and say, gosh, we think it's going to take 6 months, we would probably encourage you to do 9 months on your term. It doesn't hurt you to have a longer term, but it does hurt if you don't meet within that guideline. So if you choose 6 months and you can't finish it within that time frame, then you're going to lose whatever the interest rate locked in on, especially on a one-time close. And so you really need to gauge that correctly. If you finish in 6 months and you're on a 9-month term, you can just pay the interest monthly, or we could close on your long-term loan. We can do the modification early, but we can't do it, we can't extend that. I hope that makes sense. So it's better to choose a little bit longer term than what you maybe need, just in hopes that there are no unforeseen delays, but if there are, you're covered well. So that's a really good question. Thank you for that. Thanks, Shane. There's another question. Are these construction loans available for members planning to build outside of Utah? Don?
The quick answer is no. We're only limited to the state of Utah. We lend to anywhere within that state, any of those counties. I forget how many counties, 28, 36 counties, but it has to be within the state of Utah. It cannot be outside in another state. That's just our charter.
Yeah, I wish we could say yes on that. That's a really good question, Hannah, but the answer is no. Dang it. So after you're close with the title company and you're getting ready to move forward with the construction, we handle construction payouts by draws, and the draws are handled by our loan administration department. I'm just going to throw out, you'll love working with them. They're delightful. They'll work hand in hand with your builder and with you. Each time funds are needed, we try and limit it to once a month, but there are extenuating circumstances from time to time. Sometimes we need to pay for some deposits to get orders made, or to place the initial orders, or something comes up, and we're certainly willing to help you with that. But we try and get them on a schedule, because each time we do a draw, we do an inspection on the property to make sure that we're staying in line with the percentage of completion and the amount drawn out on the construction loan. For instance, if we get a draw and they're requesting us to pay out, and the loan's going to be paid out at 40% and the home's only 20% completed, we're going to question that. We want to make sure that the amount that's being drawn is in line with the amount that the home is completed. Some builders try and push that a little bit, and we found that if we do the inspections, we keep them in line, and that's just in your best interest and our best interest. So we try and monitor that. But the draws are handled, and we try and keep it into a monthly. And it seemed to work well. But again, if there's an extenuating circumstance, you just let us know, and we'll keep in touch on that. And then once all the draws are done,
conversion to your long-term mortgage. If it is a one-time close loan, again, we make sure that the home is complete with an occupancy permit, or the home's done if you are in a remodel through a final inspection, but we just make sure that that's done. And then you sign some documents to say, this is the balance of the construction loan. This is your interest rate that we guaranteed up front. The term, a 30-year term, these are your payments with your escrows for taxes and insurance. It's a simple modification, and then you're off and going, and you start making your long-term payments on your long-term takeout loan. And it's a simple process if it is a one-time close construction. If it's a bigger loan, then you have to go do a two-step. Then there's the reevaluation and reapproval of the loan, and that can take, again, a new appraisal, different things to make sure that home is complete as per plans and specs.
Okay, we have a question. The question is, do we have to have a builder? Do we have to use a builder on your approved list? Don?
We do not have an approved list. We do have builders that we've worked with in the past, but as long as they supply us with our needed requirements, typically they are, a license. We'll pull their credit report. We want to see their tax returns, maybe a resume to make sure how long they've been building. So we do that, but they do not have to be on any pre-approved list. We can evaluate any builder in the state of Utah.
It's a really good question. Thank you. One of the questions that we get from time to time is, can we use this for renovations? And we addressed that to begin with, but I want to just answer another question. There's a fine line between doing some renovations that might cost you around $50,000 to $75,000 and doing a complete remodel. One of the things that we would encourage you is, if you're considering either of those scenarios, come in and sit and talk to us and let us look at the different options for you. If it's right on that borderline where it's going to be beneficial, maybe a construction loan isn't the product that's going to be best for you. Maybe a home equity line or a second mortgage is going to be better. Just give us an opportunity to sit and talk to you about the different scenarios and show you, and then we'll choose and help you choose. I shouldn't say we'll choose, because we're really not ones that choose for you, but we'll give you ideas, and then you can choose what works best for you. Okay, we're going to move forward. Some do's and don'ts. So some do's.
The best thing you can do is check with your mortgage consultant before you're making any changes. Say you're in the middle of this and you start to run out of money, and that finished basement that you had planned on just isn't in the budget anymore. We need to understand that, because that will affect your value on that home by quite a bit, and it will determine maybe if you need mortgage insurance or not. So any change that you do in the construction process, any changes, we need to be involved so we know that it works within the loan that you've got. Keep in touch with your builder during this construction process. Visit the lot, visit the home as it's being built. Make sure that the builder knows you're coming, or maybe after hours you can inspect it, but know what they're doing. On those draw requests, you're going to help approve those draw requests, so you need to make sure that it's progressing. When we mail those checks out, we do it with lien waiver checks. So when the subcontractor, the supplier gets those checks, they will not be able to put a lien on your property, because they've signed a lien waiver check and the work is done, the product is there, so that's great, and those draws are there for your protection, and you were involved in that process. Contact your mortgage consultant with any questions going forward. Construction, building your own home, I've never done that, but I understand it can be challenging. So make sure you've got a good marriage. Just kidding. No,
I have. Yes.
So make sure that everybody's involved. You're up to date. You know what you're doing. You're visiting the property. You're seeing that home being built. That's the exciting thing to do about your construction loan.
Yeah. Okay, and some don'ts. Don't begin construction. You're going to hear that again. Don't start construction before you close on your construction loan. Don't go out and dig around. Don't have your friend deliver a couple of truckloads of dirt. Don't have all of these things can delay your construction loan, and we just want to make sure that we're not delaying anything. Nothing is happening that can delay your construction. Don't change your financial structure. Don't increase your debt. Don't change jobs. Don't, any of those things can affect your long-term loan. And so we want to make sure. And I know that inevitably there are things that happen that you can't maybe control. We had a gentleman that was in the middle of construction, and he got a great new job opportunity. The most important thing is to communicate that to us so that we can make sure that everything that you're doing is helping you to accomplish your goal of building this home and closing on the long-term loan. If there are things that come along that happen that are going to affect that, the faster that we know about it, the faster that we can help you. And don't deviate from the plans and costs that were submitted originally for approval. It's really tempting when you're building a home to say, well, while we're doing this, we should just do this too. And it's really expensive. And if you're prepared for that, if you have a great savings account established up front, then you can cover those costs out of pocket. But if you're not, and you need to cover those costs from the loan, sometimes that can affect your ability to qualify. So we really want to make sure that you're informed and know exactly what to expect. The more that you can stay to the plans and costs originally submitted, the better the experience. So hopefully that helps give you an idea. So we have covered a lot, and there are a few more questions, and we're going to go ahead and field a couple more of the questions. And one of the questions is, thank you, Zachary, I appreciate the question. There's a company in Utah that builds homes at their place and then ships it to your lot and attaches it to the foundation. Do these loans cover it? That is a really good question. The answer is I am not positive. Here's why. That is considered a manufactured home. And
or a modular.
yeah, it's a modular home. And we can in certain cases, but it depends on what the requirements of that company, what they require. Sometimes those companies will work with you and you actually don't have to have a construction loan. You can actually have it delivered and then you close on your long-term financing, and those we can do. If they require any kind of deposits up front, sometimes those deposits can be covered by a construction and sometimes they have to be covered by you. So it really depends on the scenario. And Zachary, I would suggest that you reach out to us and let us look into what their company requires and what kind of deposits or what kind of terms they offer. Sometimes those companies also offer financing for the building of their homes and you don't have to do a construction loan. So that's a really good question, and that's one I would really advise you to reach out to us and see what we can come up with.
Yeah, the more information you have on that process, on that company, that's going to help us determine what we can do with that loan or with that request.
But thank you, that's a really good question. One other question that we've had is, can we build on a multi-acre parcel and then subdivide the parcel after? The answer is, if you want to subdivide a piece of property, do it before we do the construction loan. The reason behind that is it is really difficult to release certain parcels after the home has been, after the deed of trust has been recorded. You have to have additional surveys and additional requirements, and it really gets into a very timely and costly event. If you're buying a piece of property with the idea of subdividing it, it's better to have that subdivision done before so that your lot and your area is defined, and we'll take a deed on that defined area. It makes it much easier in the long run and cheaper, I might add, because those engineering costs get really pricey.
So this is an exciting time for you. Please just, do your homework. Review some plans, review what you want to do, review your budget. If you need to know what you can spend, sometimes that's the first question asked. What can I afford? That's what we're here for. That's what we can help you decide. Do you need to tie the lot up ahead of time? Do you have the lot? Is it, is it given to you? Is it free and clear? Have you held it? That's a perfect scenario when you have a lot free and clear. But just the more information you have going into it, the more prepared you are, the simpler this is going to be, the funner it's going to be, and the quicker it will go to close.
Okay, one last question, unless I'll just encourage you, keep typing in your questions. A question is, what if I go over the costs, but what if I am over budget? What happens?
Boy, that's a hard one. On a one-time closed loan, you have closed your loan. If it's a $400,000 loan, one thing with this too, we kind of talked about within these line items on the cost to build, and all the cost to build is a budget, a budget for your foundation, a budget for your roof, a budget for your appliances. But we're also going to make you put in a contingency budget of 5%. 5% of the construction cost is contingency. So on a $400,000 loan, that's $20,000 that's just there for overruns, for increase in prices in product.
In case of emergency.
In case of emergencies, if one line item in that thing costs more than you thought, if you can't make it up in another thing, but this contingency is a requirement for our loan. And again, it's 5% of the construction cost, not so much the loan or the lot value, but the construction of the home, just for emergencies, for cost overruns, for delays in certain things. So remember that 5% contingency is going to be important, and hopefully within that'll cover any overrun you have. If it goes over that, again, like Jennifer said, I hope you've got a good savings account because the loan is closed on a one-time construction loan and we can't add to that loan.
So there are individual line items that you may run into that you might decide, Dawn mentioned like on appliances. If you put a budget of $6,000 for your appliances and you go shopping for appliances and see a fridge that you're in love with that's going to take $6,000 and that's your whole budget, and there's still the cost of a dishwasher and a stove and a microwave or whatever, we are going to require on those specific things that you cover the additional costs out of pocket. Those will not come from the construction loan. You'll be required to cover those additionals. And likewise on any kind of allowance line items like that, carpeting and light fixtures and those types of things that are kind of a line item that have a budget addressed to them. If you go over that, we'll ask you to cover those additional things out of pocket. Those budgets are set for a reason. They're set to try and help keep you in line on costs, and if you choose to go over those, then like I said, that's what a savings account would be established, or going into it that you'll cover those additional things. We really try and just, like I said, you can kind of see how we really try and structure this to keep you in line and keep you so that the end result is that you'll be able to qualify for that long-term loan and not get you into a situation where you can't qualify or that it's going to be too expensive for you.
You're going to go through these budgets first. You're going to go through that cost breakdown with your builder, and you're going to decide these budgets or these line items up front. So understand what they are, understand the potential for cost, and increase them up front so you don't run into that. If you don't spend the money on the construction loan, that does not roll over into the long-term financing. Then you can save money by not spending your full amount, but at least you're covered during construction for anything that might come up.
Just in case. That's a really good point. Okay, you know what? I think we've answered all of the questions. We'll wait for about another 20-30 seconds after if there's any other questions, but thank you so much for joining us. Just a reminder, you'll get a follow-up email with a copy of the recorded webinar, and in addition, those of you that have attended will actually put you into a drawing for the 2 tickets to the basketball game, along with the opportunity to do the shoot for the loot, which I always mess up, whatever that is. Good luck. If you get an opportunity to win those, I hope you win the $600.
Any other questions, give us a call. We'd love to sit down with you. We'd love to sit down with your builder and just go through this and have you understand this better. We're open, we're available to have a sit down with us and go through all this information if you have any other questions.
Great. And you guys have a great afternoon. Thank you so much.